Good morning, guys. Welcome to today's edition of the London Session Open. Today is January 30th, 2020, and it's 9:43 a.m. in London when we're doing this market update. Today, I'm streaming live directly just to the YouTube channel of ATFX. Gives you a good opportunity to
Good morning,
subscribe to
guys.
us.
Welcome
Afterwards,
to
there should be
today's
like a
edition
little
of the
button
London
here
Session Open.
where you can subscribe. And as well, there's like a little bell button, gives you notifications when we're live. In the chat box today, we got Nikos from Greece, and we have True Invention here as well. Good morning to you both. Thanks so much for joining me, and also for all the other ones of you, like the 7 of you that are watching, and as well for everybody else that is going to watch the recording of this, which you might do, I don't know, whenever you do. Let's take a look at the markets. Okay, so we had the Fed rate meeting yesterday. They didn't do any major changes. It's going to affect the economy. They didn't say anything dramatically. So nothing has really changed compared to the situation yesterday. We still have problems with the coronavirus. We did see higher numbers of people with confirmed cases. It's a growth of about 29% from the day prior. So slightly less of a growth rate that we have seen recently. And hopefully we'll continue like that. What we also know is that it's been at least a week or so, actually since the 20th, that they started to track this on many different sites, 20th of January. So yeah, so pretty much from last week, it's a little bit of a panic mode, people staying indoors and things like that. So I still think it's going to affect the Chinese economy. So I still think it makes sense that people will probably continue to buy dollars, to continue to sell the Aussie and the New Zealand dollar, and the stock market can continue to be weak for a little bit longer until we see the numbers coming out from China. So we have the PMI reading coming out from China. It should be next week, but it's probably the month afterwards, the next month, which is going to be the more important one. Now, from a trading perspective, we said look to sell up here, look for this to go down, which it did. It has not reached target, but we bounced from these levels, and yesterday we were slightly lower than where we are now, or around these levels, and I said this is a good level to book profits. Because of the Fed rate meeting, it was a gamble. We could have been up, we could have been down, we don't really know. So it was a good idea to book profits here as well. The market was a little bit stretched, and we're just about the major highs here. So now I would say let this go up to maybe 110.50, 110.79 to this little area here, and from these levels turn bearish again. On the other hand, if we never go up and we just trade sideways here and then take out the lows, and that's also something we can do. If you check out the Australian dollar versus the USD dollar, which also has the head and shoulders that I shared with you guys, then it's a very similar situation where the price reached an important level, spent some time, but today decided actually to trade lower. Ideally, it actually spends 2 days above this high. That would be the ideal, because then when you have a break, it will be much more forceful. GBP versus the USD. So it's bouncing off that little spy spot at 129.54. It bounced, 2 days ago, and then it bounced today as well. And today is going to be a key day for this market. We have the Bank of England rate meeting out at midday London time, and then you have the press conference. I think that starts at 12:30, like half an hour later. It's gonna be volatile and it's super difficult. I always found the Bank of England meetings a bit difficult because they release the forecast and the minutes and the statement and the press conference. Everything just comes bundled in, and it's not like a short document. There's way too much information. And then when you read what people write about it, it's always some sort of confusion. No one really knows exactly what happened. And the pound itself, to begin with, is a messy currency which loves to break out, and then 24 hours later it goes back into its prior range. So normal sort of breakout tactics on these markets are very difficult. So what do I prefer to do? I prefer to step aside and let the market have its course, and then if we're trading below 129.50, then that could be something. And what is a little bit different here compared with previous days is that we have the likelihood of a rate cut is pretty much 50-50. Let me see what the latest one is. So this is interesting. It's actually changed dramatically Like 1 week ago, the likelihood of a rate cut was at 63.9%. Yesterday it was at 5.50, 57%. And right now it's just at 24%. So it's been a quite dramatical change. And look at this, like a month ago, the likelihood of having no rate cut was at 84. So it went from not having any rate cuts by the 31st of January. No one pretty much projecting that. And then we had a few comments from a few members of the Bank of England, and things shifted, and now shifting back to no change bias. And just until recently, it was just 50-50 almost. And because it was a 50-50 situation yesterday, if we would have had a shock cut, this could have declined a lot. If we wouldn't have a shock rise, it could still have risen a lot. Now, if they cut and don't cut today, that's important. But what's more important is what they communicate for the future. And they might still say, oh, we're going to cut next month or next time. And then that would still count like a cut today. So what can we do? Keep an eye out for what they say. Try to make a quick call and try to say, okay, is this more bullish or is this more bearish? Then you look at your charts, and you don't necessarily have to jump on board immediately. It's probably a good idea to give it like an hour or so the market can digest, and then we can check it out tomorrow. Because sometimes what we can do is just that, say the market goes down, and then the day afterwards when it goes up, we sell it here. Alternatively, it just does like that, and then maybe tomorrow when it revisits the spot, we can buy again. Dollar yen is going a little bit lower, so we have more cases today. I think some 7,000 cases of the coronavirus, and I still think it might sense to buy slightly lower levels if you want to go long. I wouldn't be buying here in the middle of this range. It's sort of dominated by this channel, and this channel, we're not close to the low range of this channel right now. What else? Gold prices looking good. So this is a nice healthy uptrend. We talked about this before. We said look to buy here. We said look to buy here, and this one is in profit. This one is in profit. We're back up at the prior levels. I think we can continue a little bit higher over the next few days. If we revisit this little area here, I think people are going to be buying again. And nothing wrong as well if you did buy down here to book half of the position if you didn't do this already down here. And if you bought here, depending on your risk appetite, there's nothing wrong booking half of the position. This is crude. So the level we talked about is still there. And we're doing what I was assuming that we would do yesterday. And that is when we decline to important level, we go down. And then it just has to have that correction, and then it went down again. Now it looks to me that the worrying about the coronavirus, and more important than the fact that people are delaying production starts and things like that, is causing crude oil to soften a bit. And we're just above that key level at 50.45, and I think we can probably take out the low, go a little bit lower, and then I think it's going to start to get a little bit messy here. If you really want to do something, you might potentially be able to sell at 53.75 and then let it go down again, and then at one point the trend of funding level is going to come here. German DAX. So yesterday we said that the market is probably going to turn bearish from this level, which it did. We reached a low here, 50% or 100% take profits, nothing bad with that. And then trend of funding level was here, it's now here. And if we do swing up, I think people are going to sell again. And if you really want to be a buyer, you probably should wait for a break to 13,017. As for the S&P 500, the market went down and up, and this is my new sort of short-term trend finding level. I still think people might be buying down here, if anything. Let's talk a bit about cryptos. We're definitely having a bit of action in the markets today. So you got Bitcoin, not really doing too much, but you have other stuff like Litecoin. This is Bitcoin, by the way, it's bullish now. So you have Litecoin, which I find interesting. You got yourself an inverse head and shoulders here, head, left, and right shoulder, and a break probably to the November 9th high of 65.48 is probably when you want to look for the actual pattern to break. Is enough really with the high here from 2020, but I do prefer the break to this level here. There's other markets as well which are looking very similar to this one. Okay, let's see if you guys have any questions. Okay, so we have a comment here from Ashu saying that he's a big fan of my chart analysis. Thank you very much. I hope it makes sense as well. And thank you so much for joining me. What about the Aussie dollar versus the Swissy? Let's take a look at the Aussie dollar versus the Swissy. Well, this is some old analysis. This is interesting. Okay. This is some old analysis that must have done this some time ago. So let's take a step back then. So you got this big triangle. You had the break here in June. Then it went down and then it retested. And then it went down again. And then we must have looked at this and I said, look to sell at 6874, which stops here, because if we push above here, we'll go back into the triangle, right? We don't want that. And it was a perfect entry, and now perfect exit. It would have been nicer, of course, if it went down quicker. The entry was in November. Let's take a look at the markets. Let's take a look at this now from the bigger picture then. So this is your weekly chart, and let's clean this chart up a bit. Okay, so this is your weekly, and we're very close to trade above this low, which is the August, sorry, the low from summer of last year. And according to this chart, we have never been lower here. It's a bit difficult to say what's going to happen next. Actually, it's not very difficult, but we can do some stuff here. Actually, let's do this. I don't know if you can see it, but I see another triangle. I like to take sort of the midpoint of the triangle. So you had a breakout here in 2015, and that's your target. That's your long-term target based on that triangle. Is there anything smaller we can use? This is a ascending triangle, which would be bullish on the break here. Instead it traded the downside. Again, we can take the difference like that. That's interesting. That gives you the exact target. You can also take the base of the pattern, which is like that, and that gives you this target down here. I was gonna load the pivot point indicator as well, and we're gonna change this to gonna make this the yearly pivots. That's interesting. It shows you. There we go. Okay, these are the yearly pivots, and you got your yearly S2 down here. You got your yearly S1 down here. So maybe that could be some longer term targets to work with for this bearish trend, because when we're dealing with bearish targets or bearish downtrends, so this is clearly bearish, then I prefer just going with bearish biases. Now, if these are potential targets for the end of the end of this year, then what can we do here? This is your daily chart, by the way. I'm not sure we can. There's definitely not like something about to break here immediately, by the way. There's a soft head and shoulders, right, left shoulder. So actually about to reach target here. So it's actually a bit difficult for me to say. I mean, we have those long-term targets, but I don't necessarily see a very good pattern here we can work with right now to trigger a new entry. And maybe at one point you have a low here and a low here. If this swings up and then tumbles, that would be good, because then at least we have taking out this double bottom, and then the difference between these two levels and this high, that gives you a take profit level, which is also lower. But undoubtedly, guys, we're about to trade below this low here. And there is a simple system, a simple trend following system you could potentially apply here. And that system is very simple. When you break a low, you go to the next low. The only problem here, there is no major low to your left because we haven't been lower. You do have the S1 at 64.32, and then you got the S2 and that target down here at 61.50. So something you could consider is potentially the following, which is that if we take out this low here, then this high here at 66.05, that becomes that new trend defining level. But maybe even better is to give this a break. Don't trade this right now, because I think if you sell here, you need to wait for the market, and you put a stop here. Your risk reward ratio, which is the difference between entry and stop, is going to be way too wide. And then you need to really see the market go down much lower before it actually makes sense to get your risk reward ratio. So maybe you can let it go down, and then if it goes up, maybe we can sell here somewhere following that breakout, and then we have a tighter stop loss, and then that can make wonders on your risk reward ratio, because right now selling here, stop here, imagine we go all the way down, which is gonna take like 6 months. You just get a 3.15 times risk reward ratio. But if you sell it here, maybe down, up, and stop loss goes up here somewhere, then your risk reward ratio suddenly becomes 5.31, and you don't even have to target those low levels. You can probably target less levels, which is more realistically, and you can still get a 2 times risk reward ratio. So we have Gray saying, now that the UK is leaving the EU, do you think London can decentralize a lot of financial activity that New York City has gobbled up in the last 4 decades, going back even past the Great Depression? So the question is, do you think London can decentralize a lot of financial activity? That's a good question. There's definitely going to be decentralization, right? So I have a few friends of mine, some Germans, some Dutch, some Italians, some French, and they all came here as graduate schemes, and they joined the likes of, say, Morgan Stanley. And what they did is that they were primarily working, for example, one friend of mine, he was working on the Dutch desk. So they had a team of maybe 5-6 people or something like that, and they would do all this fixed income business. And what is happening now is that the way things are going is that the benefit is before, you had that team. I don't really know exactly how many were, but the sound was like 5 or 6 of them. You had them on a floor, and then next to them you had like another team and another team. So you just had one big floor, and you had all these different nationalities. And this Dutch team would sell into Holland, right? And they would deal with clients in Holland, and also anybody that wanted to buy Dutch assets. That's what they would deal with. And that would bring economies of scale, because you just have one floor and you have everyone, as well as like you can have one CEO, and that CEO will oversee what everybody's doing. You have the compliance on the same floor. You have everything on the same floor. Now though, the broker, or not the brokers, but if they want to do something similar, most likely, I mean, they already moved some people, not necessarily Morgan Stanley, but other people have moved. So what happens is that these desks go out there, and now suddenly you need to set up a different entity. You probably need to have your own CEO, you need to have your own compliance, you need to have your own lawyer, you need to do everything. So all these costs are now added on top, and it makes it more difficult it makes things less profitable. And it's the same thing here with brokers like ATFX or like FXCM that I used to work for. Before, you just had your London headquarters, and they would sell into these different countries. But now, as most likely, firstly, there's no deal yet for financial services. And they're already pushing that things need to be localized. and now there's talks about the fishing rights and things like that. It's likely as well that what's going to happen is that uh, these brokers need to open up offices, and not everybody's going to do that. You need to register at the local regulator. You need to put up cash, which you just have on a bank account because that's what the regulator wants. So, for example, in the UK, I don't know exactly, but maybe you can have, just to begin a broker, maybe you have 100,000 pounds on your account, and you have that, and then you can operate in all these different countries. Now, imagine you have your 100,000 here in London, and you want to open up in Spain or Germany. Actually, it's fine to do it with one operator over there, but then again, you need to put money there, whatever the capital requirements are there. So then suddenly, businesses that before was possible, it's not possible because not everybody has money to do the regulatory stuff, hire compliance, hire local CEOs and everything like that. So yeah, most likely decentralized, and then we'll see what happens. Hopefully, there's already changes happening, but there's changes happening where people, you know, you got like other sort of companies taking over. The only challenge, though, which is a bit of difficult now, is that, as you probably noticed, there's a lot of apps nowadays, right? Apps for this, apps for that. And what these apps do, the technology, what it does, it reduces the headcount, so you don't necessarily need all that extra people. Spotify, for example, I don't know how many people they are, but they're not a lot of people, maybe 200, maximum 400 people, and still they service so many millions of people. Whereas before, you know, you had to go to your shop and you had to buy your records and CDs and DVDs. You don't have to do that now. So whatever jobs are being created now, unfortunately, what's happening is just that they doesn't necessarily employ a lot of people the way manufacturing does. And that's something that's just going to continue going forward. But there's going to be more problems now, I think, than before. And unfortunately, the way it works, you know, before you had all these offshore, and you still have the offshore entities. You had like British Virgin Islands, you have the Caymans and Bahamas, but all of these now are getting blacklisted, and you know, getting difficult to operate with, just because of money laundering and all of this. So it's unlikely that the UK is going to be able to sort of become an offshore financial. I mean, it's going to be offshore for all Europeans and for everybody. This in the UK is going to be offshore, but it's going to be difficult for them to be very, very relaxed with everything, because then they can just get blacklisted. Not that I think that would happen, because I don't think they're going to push there. But what they will probably do is that corporate tax is probably going to come down quite a lot. Maybe we'll, it's going to come down a lot. It's going to be easier to hire and fire as well. So that could potentially create like a big wave of innovation, and hopefully we can create industries and jobs for a lot of people to benefit, and not for just a few. But it's going to be a challenge, and I think it's something that we probably would have needed to deal with at one point anyway, but for different reasons. But yeah, economies of scales, which is really important, that's now being shattered with the UK leaving the EU from a financial perspective. And unfortunately, I think the idea is, you know, you have all the very rich people in finance, and then you have people that are not in finance, that are not making as much money, which I understand. The idea is maybe was to, you know, do it like that, but probably what's going to happen is going to be like that. So we'll see. I truly hope I'm wrong. I do truly hope I'm wrong. I have a flat in central London, and yeah, and I work as well in finance and everything. So we'll see. We'll see. All right, let's take a look at the euro yen. Okay, this is your euro yen, and the euro yen sort of bullish, and went up, and then had a quite significant slide. It's quite interesting. We've seen this slide here. When did it start? So it started here on, yeah, okay. So we on the 17th, Then on the 20th, when this whole Corona business started to kick off, the market has slid with about 2% to 246 pip. Looking at this today, it's a bit difficult to be honest, but let's look at it like this, okay? You got that trend line that's done and dusted. You had this channel, almost a wedge, and then you have that difference here, which you can apply there. The only thing here that this has not really started to trade much lower, so you need this to reinitiate and trade lower, right? So you're looking at 119.78. Okay, that is what you're looking at. And then you got some other support levels down here. So there's two ways this can be resolved, I think. In the very short term, you have a little sideways pattern as well. You got yourself a double top, this on 27th of January, and then on the 28th we had another one. So this by itself is almost a bit like a double bottom rectangle pattern in the very short term. So I think my preferred scenario would be take out 119.78. If we do like that, we might do like that. And then an alternative is that we just do something like this, okay? And we go back into this range, and if we take out this, we might go a little bit higher, 121, 121.50. So this is what I will look for. Keep an eye on 119.78 and 120.42. Those are the levels I would watch. Okay, except of the Bank of England rate meeting, is there anything coming up today? Got some consumer price index figures from Germany. Don't think it's gonna matter too much though. Later you got inflation figures from the US, like quarter PCE anticipated to decline from 2.1% to 1.7. You got US GDP as well, that's important. It's for the fourth quarter, anticipated to increase with, let me see here, 2.1%. So same growth rate we had in the third quarter. So that is something as well to keep an eye on. Otherwise, it's not too much happening. Tomorrow, Friday night at 2 a.m. London time, we have the PMI figures. They are for January. I just don't know when the cutoff period was. So I think we probably need to wait another month or so until we get the next set of numbers. Okay, it's 10:10, and we're gonna wrap things up. Guys, thanks so much for watching. Don't forget to hit that like button. You might not agree with everything I'm saying. I'm a trend follower, so I assume, if the market is going down, 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 a lot of people look to buy and buy, which can make this a bit unpopular. But I hope you can still be objective about it. And if you do like the presentation, don't forget to hit that like button as well. There is a subscribe button, which should be here somewhere. I can't subscribe to my own channel, of course, so I can't see it. Maybe if we do like this, I'll see it. There you go. That is the button you're looking for. Click on that, and then there's going to be a little bell button as well to your right. As well, don't forget to check out investingcube.com for more analysis. There's a lot of content here produced by the team. Guys, have a great day, and I'll see you guys tomorrow around the same time here on Investing Cube and on the ATFX page, YouTube page. Thank you very much, and have a great day. Thank you, and bye-bye. Thank you.